Grant, welcome. We're excited to have you on as one of our early guests from the investor side on Build with Bitcoin. Um, we'll cover quite a bit of topics today, including a little more about your fund, what you're doing, some of the portfolio companies, the process, and a whole array of fun topics here. But we wanna start. We like to start with getting a little more um, context on the team, the purpose behind it, maybe a little bit of the backstory. So that being said, uh, I believe 1031 was perhaps the first, if not one of the first investment platforms to focus on Bitcoin companies specifically. So if we can start there, 1031, how did the team come together? Why did you guys decide to launch 1031? And we can get a little into your background and experience as well. But we can start there.
Yeah, and thanks for having me. Excited to be a guest today. So the origin of 1031, I mean, it really started, you know, as with most people who have gotten involved in the space in some way, it first starts with just interest in Bitcoin. And so that was the case for me. And Jonathan on our team, he and I co-founded 1031, but I don't know if it's widely known, but we're cousins. So we've known each other our whole life. I grew up in Kentucky. He grew up in Indiana. We spent a lot of time together growing up, and we had different career paths, but an overlapping interest in business and the markets. And over a number of years, we had been talking about Bitcoin. It's at this point, it's almost 10 years that I've been interested in the space, but the first few years I was just following it. I wasn't spending all of my time on it. I was just paying attention to it. And then in early 2020, um, we really started to become interested in how can we support companies in the space. We found a couple opportunities to invest in some businesses. At the time, so my background is investing professionally, um, which I had done for about 15 years for a large cap private equity firm in New York City. And so as a profession, I was investing in companies, building relationship with founders, partnering with them for, 5, 10 years or more, helping them grow their businesses and looking to deliver solid, superior investment returns for our limited partners. So that was just something that I really enjoyed. On the side, I was also doing a lot of angel investing, which was the opposite end of the spectrum for my career. My career was late stage private equity, control buyout, mature companies that $1 billion plus in terms of valuations and even revenues and profits for that matter. But I was also doing early stage investing on the side. And when we came across the opportunity to invest in some Bitcoin companies, we were already several years deep down the Bitcoin rabbit hole and believing that there was something really fundamental about Bitcoin. But then also, I was interested in supporting companies. It was just an interest of mine. I like investing, I like partnering with companies. And so that was really a light bulb moment for us that um, we started talking to some founders in the space. We They were companies that we had already known for years, and when we looked around, as you noted, there weren't too many groups around at the time that were investing in the ecosystem from just a um, capital partner perspective, venture. Um, that's when we decided, what, we need to like try to spin this up ourselves, because like we started writing some checks individually into companies, and then I didn't have infinite money myself, so I was looking around thinking, are there other funds I could just put some money into a fund so I could get some broader exposure and support a space that I believed in? But It seemed like there was very significant demand from the companies for partners that were aligned with them on, the mission and the opportunity to bring Bitcoin to the world. And when we felt that demand from the founders, that's when we decided to like go launch it ourselves.
And to be clear, Grant, these are all, and since the beginning, have been Bitcoin specifically, right? You
Yeah, it there starts to be a little bit of gray area, but we generally say, yeah, a Bitcoin focus. Over time, one of the key themes that we have been um, talking about for a number of years now, which is still in the very early stages, are companies that are not necessarily Bitcoin first, but they may be coming from outside of the Bitcoin ecosystem. They might just be pure play technology companies that decide to become interested in Bitcoin and adopt Bitcoin or adapt to Bitcoin in some way, incorporate it into their business in some way. That can mean a whole number of things. It can mean just holding Bitcoin on their treasury. It could mean wanting to accept Bitcoin for their products and services. It could mean integrating into the network more directly. We think that will be a growing theme over time because one of the things we like to say is every company will eventually become a Bitcoin company, just like every company has become an internet company in some way. For the most part, I think we're in the very early stages of that right now. We do have we have some investments that sort of match that thesis. When you look at it, it's not a company that would have historically been known as a Bitcoin company, but by and large, yes, it's the companies that have had a Bitcoin focus.
Do you have any parameters regarding the sector, like hardware infrastructure, wallets adoption, um, communication, or geographically? I mean, what are your? Do you have specific sweet spots that you like to invest in?
We, I'd say, of probably most investors that are deploying capital in the space, we probably are the most diverse and the most broad in terms of what we look to invest in and the stages that we invest in, the categories that we invest in. We generally consider ourselves to be an investment platform for supporting the ecosystem, and that means participation across all the major themes. It's everything from financial services. It is mining. So unlike most funds that would call themselves venture funds, mining is not really a venture oriented category. It's capital intensive. It looks more like private equity than venture capital. But we've leaned in pretty heavily into Bitcoin mining, and it's not strictly just companies that are prop miners that are mining Bitcoin themselves. We do have some of those, but it's also the companies that are providing the picks and shovels to the mining companies that are selling products or services to the mining companies, or also selling to the oil and gas companies, the energy companies that might be looking to get into mining. So that's definitely an area that we've leaned into. Probably 20% of what we've invested in is mining related. Similarly, on the hardware side, you mentioned, we're not scared to do hardware. I mean, hardware is a very tough category and business to be in, but that's one where we've made some investments around hardware wallets, node infrastructure, etc.
And for your different funds, Grant, so you launched Low Time Preference Fund One in 2020, if I'm not mistaken, and
Yeah.
you've had two of those. You're actively raising capital for the third, and then there's also a tactical fund, right? So you've had some, well, for such an early sector, right? You've had quite a bit of experience in this space, right? Not many investors have been focused on Bitcoin companies for too long. In this short time period, what have you noticed as far as deal flow from when you first started to now? How much how much more deals are coming through the door? How much interest are you seeing from potentially qualified investors looking to participate in some of your funds? How has that changed in these 4 years?
Yeah, it's a good question. I think that, the industry activity broadly is probably not surprising, but it does ebb and flow with the Bitcoin price, particularly on investor interest in the space. Like you hear legendary investors say, invest when people are fearful and don't invest when people are greedy. But human psychology is most people are scared to invest when no one else wants to, and everyone wants to sort of ride the bandwagon when things seem more optimistic. So with the price, that drives a lot of activity from the investor side, which necessarily also impacts um, industry fundraising activity, because when there's capital floating around and demand from investors, then it's generally pretty easy. Like if you're sitting on capital, to deploy it. It's harder, I think, not to deploy than it is to deploy. So it does have an impact on, call it deal flow, but like another way to just think about deal flow is just founder activity, like where, how much entrepreneurial spirit is there at any given time to go build something that as a founder you feel like you want to see in the world. You don't see it yet in the world, or you don't see something like what you have in mind and you go do it. Generally, I'd say with that type of lens, it has been pretty consistent over, 5 years. And um, what we've seen is that founders in the Bitcoin space tend to be very mission driven about Bitcoin in general, and as a result, aren't necessarily as deterred with the ebbs and flows of price action. But when the price does move, I think you start to see an uptick of companies who want to go raise funding, who want to capitalize on an interesting opportunity, who might think that now's a better time to raise money than when the markets are down, because then maybe you can get away with selling less of your business or something like that. But in general, the long-winded answer, long story short, is that it does ebb and flow with the price action.
Drilling down a little bit on that, your investor profile, has that changed at all? I'm thinking your earlier investors were probably also very mission driven, your LPs, in that they had a belief, as you did, in supporting the Bitcoin ecosystem and the founders. But I mean, we're sitting in second quarter 24 right now. First quarter, we saw the launch of the ETFs. Institutional entities are now becoming at least a little bit more familiar with Bitcoin as an asset, maybe not as a technology yet, but have you seen that shift into maybe individual family office investors to institutional interest, or not yet? Or how do you perceive the shift in your LP profile?
Yeah, I think so. I do think the funnel is getting wider. Early investors were still pretty diverse for us. It spanned everything from your high net worth individual, your entrepreneur, to your family office, to your institution, which could be endowments, pension funds, etc. So there were some, but they were the outliers relative to their class. A university endowment that is interested in Bitcoin um, at that time is still pretty unique, and even right now is still pretty unique. But over time, we are seeing more in each category starting to become interested. Some of the challenge is that a lot of people, and I say people generally, but institutions and family offices, they got interested several years ago. It always happens in waves, but they got interested and started to participate in crypto or DeFi or Web3, and a lot of them have been burned from that. So It's sort of, you're seeing more investors come in. I'd say they're predominantly those who did not get burned in the last cycle. Meanwhile, those that did get burned are still sitting on the sidelines. So I think it's starting to thaw, but still pretty early days there.
And digging into this topic of your investor profile, Grant, I'm curious of the institutional or not investors so far with 1031, how aligned are they with your, and maybe you can speak a little to this concept as well of low time preference, right? Your funds actually have the name, of course. So how aligned are investors with this long-term low time preference concept that we hear so much about in Bitcoin, or are some of them just looking to get exposure into a new sector? Is it a mix of both?
Yeah, I think one way that I would answer this is, when the crypto blowups were happening, like in mid and late 2022, BlockFi was going under, FTX went under, Celsius, Voyager, all of these. I mean, it seems like so long ago. It wasn't really that long ago. But that was pretty chaotic. And, you would look at the headlines and, it was jaw-dropping. But for some of us, not very surprising that some of these things were happening. But it was pretty wild. It was about as wild, just in a different way, as before the cycle turned, when you would look at the headlines of, Tesla just bought Bitcoin, and, people were just shocked to see some of these things happen. And at that time, when some of these blowups were happening, one of the examples I like to use is that I'm pretty sure it was zero emails and zero calls from our investors. And we've got a lot of investors. We got zero saying, hey, are you guys okay? Are we going to be okay? Is my investment safe? Did we have any money at FTX? What was our exposure? And that, I thought, was just really interesting. Is it indicative that they are all low time preference, hardcore believers in Bitcoin? I think it's at least one data point. We have a pretty broad investor base that, some of them are OG Bitcoiners that were mining in 2010. Some of them are institutions that have been holding Bitcoin on their balance sheet for a long time. So they told us, different groups told us pretty early on that, hey, we've been through multiple cycles before. We know it goes up, we know it goes down, and we're going to be here through thick and thin and supportive of what you're doing. So I thought that was a really compelling example. But there's only so many of those type of groups, and as we look to grow our business, we're going to have to expand into investors that are starting to become interested and may not have seen the cycles. And despite all the information being out there, we're going to be dealing with a new class. And like, as the funnel widens, family offices and institutions that this will be the first time dipping their toes in.
I'd like to just get your opinion a little bit more on just the VC space during the big name VCs that were invested in these other companies, and how 1031 is different from that. Why your LPs were not calling you, because they must have known. But I mean, I keep thinking about Sequoia writing down $150 million in their FTX investment, like from one day to the next. And what is it about those VCs that changed the model, or they weren't seeing? I mean, what were they doing differently that caused such massive bad investments, number one, and then failures of those investments?
Mm-hmm. Yeah, I mean, I think broadly speaking, the the fact that a lot of these VC funds and crypto funds, starting in 2016 and 2017, were able to get near instant liquidity on their investments just by creating tokens and then monetizing those, dumping on retail, as we like to say. That was able to deliver a completely different profile of investment for venture funds broadly than we've ever seen before. And so, it was this allure of, what I like to say is, they were chasing after, fiat dollar gains. And the catchy thing that I say is like, we're chasing after a Bitcoin future. Like, we're not, of course, we're an investor and we're trying to deliver performance for LPs. So you are, by definition, economically driven to invest money and then deliver positive investment performance with that. But I think the incentives became so broken when they were able to just effectively print their own money. They were printing their own token and then selling it on others. And it was a shame to see it with some of the storied firms like a Sequoia. We like to talk trash about A16Z and A16Z crypto, and they don't understand Bitcoin. And they're like um, the bad guys, because none of the companies in the Bitcoin ecosystem want to, they generally wouldn't want an investment from Andreessen. But when I see a name like Sequoia, Sequoia is just an incredible franchise over decades. I mean, they backed some of the leading companies that are now the technology leaders of today, and they were doing that decades ago. So I think it's tough. It's tough for any group not to get mixed up in some of that when they're just their incentives are such that they chase that that money. For us, everything that we've done and how we've designed 1031, every little detail, what we named it, what our approach is, how we try to go about our business is about alignment with Bitcoin. What I said before, a different time when we were at the Bitcoin takeover was that we didn't name ourselves Andreessen Horowitz. Like, it wasn't about any of us individually. That's usually what you see with most investment firms, is they name it after themselves. Everything that we've done has been, okay, well, how do we align with Bitcoin? How can we help push Bitcoin forward? Because we generally believe if we do that, then, goodwill will accrue to us, good performance, good outcomes. So that's generally how we've done it. And I think when other funds sort of stray from that and are chasing other things, that sort of puts you at risk.
And what's the origin story of 1031?
Just the name itself?
Yeah.
Yeah, it is a little confusing, unfortunately, because at the time we didn't realize it had a real estate connotation to it. I wasn't a real estate guy and I didn't know much about it, but there is a concept of 1031 exchange, which confuses most people. But 1031 is just the date of the white paper, October 31st. And we spent a lot of time in 2020. It's these like small little details like you get obsessed with well, this is the one time you have to make the decision, like, don't screw it up. In 1031 to us, it was, all right, what can we do that shows an alignment with Bitcoin, but it also needs to be, it needs to be catchy. It needs to roll off the tongue. Like, I find that 1031 sort of, it is memorable. It rolls off the tongue, despite it being confusing to people who know real estate better than we did at the time. That was the impetus behind it. And even I'm wearing a 1031 shirt right now, and even the logo itself. If you look in the white paper, you don't have to look too closely, but it's sort of a hat tip to the proof of work diagram, which is there's a block which is dependent on the block before it, and then impacts the block afterwards.
Yeah, well, I mean, it is curious. I think Satoshi and Bitcoin teaches us all as we're, working or getting involved in it one way or another, the elegance of that strong foundation, right? And it sounds like 1031 has really, brought that home since the beginning, which is, hats off to you guys. So, Grant, of the two active funds right now, which would be the Low Time Preference Fund 3 and the Tactical Fund, can you speak to the difference in check sizes, what stage each one is investing in, qualified investors behind those? What are the main differences between the two funds?
Yeah, the simplest way to think about it is we have those two funds to cater to a different type of investor class. In our last funds, we had a pretty high minimum for investors because we were targeting a pretty large fund, the largest in the space, and we were able to be successful in that. But we also had to turn away, a number of investors that wanted to invest with us, but they didn't want to put in seven figures into a fund. And this solution that we came up with allows us to have a fund that sort of more caters to the institutional investor. It could also be high net worth individuals, but an institutional investor that is comfortable deploying at a larger scale and meets a little bit higher threshold in terms of investor qualification. But then we also have the tactical fund, which allows for individual accredited investors that could come in for smaller checks. But otherwise, the funds are more or less the same. The target is to be investing in companies alongside of each other, so that from a investment exposure standpoint, there wouldn't be any material difference from that perspective. And as it relates to fund stages of investment, we've invested at the very earliest stage, pre-seed, couple people, solid idea, want to go build a company. Like, we take a lot of pride into backing some of the best founders in the space and being the very first group that they've come to for that type of support, all the way to leading. We've led Series A, Series B, and we're quite comfortable participating in a pretty wide variety of fundraising stages. I mean, my background is in private equity, so I'm very comfortable investing in size and in later stage companies. In my career, I used to do average investments of $500 million into a company. So to some extent, the later it gets, actually, the more comfortable I am based on my experience in knowing what companies should look like as they try to scale to billion-dollar plus levels. But we think that there's merit to participating across the ecosystem that way, not just across the ecosystem from a category perspective, but across the ecosystem from a fundraising stage perspective. Obviously, if you invest earlier and you get a stake in a business at a sub 5 million valuation and they go on to become, billion-dollar plus company, you've probably done really, really well for yourself. But I think that even investing in companies that reach 8 and 9 figure valuations at, Series A, B, C, I think based on how early we still are in the ecosystem, that there's going to be tremendous investment upside, even from investing at that level. And in addition, I think that the companies, as they reach those later stages, what we've seen is that they still value the unique perspective and expertise and just understanding of Bitcoin that we bring to the table relative to, like, who would be the alternative to invest and lead a Series A or Series B. You're starting to talk about some of the, the larger Silicon Valley VC funds who, to some extent, are not as, as focused on Bitcoin. And so the value that they might bring to the board, and around the table of the board is sort of questionable, I think, when you ask Bitcoin companies. And so we've found that even as companies get to the later stage, like a company like Strike, where we're the lead investor there and the largest investor in that business, I find the dynamic at the board, the types of conversations that we're having, I can't imagine any other investor that's not exclusively focused on Bitcoin to be able to have those type of conversations. And so that's why I think that there's real merit for us to participate both at the early stage and at the late stage. And for the funds that we have, I would expect exposure across all of those.
I think it's worth just kind of clarifying because our audience could be a lot of investors in the broad VC or tech VC space. And it reminds me a lot of when I first started investing in LATAM or Mexico startups. I mean, the ecosystem was very small and it was very new, and company, I mean, to raise a super large fund didn't make sense. It would have skewed valuations. The companies weren't ready. They weren't at a stage. And I think Bitcoin as a technology stack is in a similar stage. And you would agree. I mean, it's going to be much more common for you to have early stage deals and very few on the later stage to see your D size. And so I completely agree. And I just think it's really worth mentioning that there aren't many companies that have evolved because Bitcoin's only 14 years old, and the tools and infrastructure that needs to support it are just, I think, evolving probably more in this current epoch, or the epoch that's about to happen a week from now, more so than they have in prior epochs. And would just love to get your broad thinking of stages, maybe comparative to the broad, like the internet or a broader tech stack.
Yeah, I think it's a really good point, and it's probably not. It may not be news that Bitcoiners want to hear, but we are much earlier, I think, than most people think. We probably have one of the most unique lenses into industry activity than anyone because we're backing 36 companies. So we see the data on the number of users each company has, and I think it would actually surprise people that it's probably not quite as large as people expect. And so, what does that tell me? That tells me we're still really early, but that also gives me a lot of optimism that there is going to be a much larger impact and very explosive growth that's going to come out of these cohort of companies that are able to build something successful in the space and create leadership positions in each of their categories. Because I do think, given that this is it's an open network, it's open, it's interoperable. It's basically like, a lot of people in the venture world talk about investing in marketplace businesses. That's sort of like a big common theme that people got really excited about over the last 10, 20 years. And I think people aren't yet keyed into, like, we're sort of investing in a marketplace industry where there's serious network effects that can come to the early leaders across all different kinds of categories, and that the companies in this industry, whether or not they are in similar or different sub verticals of the Bitcoin industry, compared to others, they can actually benefit and contribute to each other's success in a way that I don't think I have struggled to come up with any example that outside of Bitcoin that is similar. Like, I always talk about how you have these specialist investment platforms. It could be, your SaaS focused investor, or your healthcare, or your business services focus. Like, over the last couple decades, what you've seen is a real shift towards specialization, right? And there's real benefits that come to that just from industry expertise and going an inch wide and a mile deep in a specific vertical. You're in tune to the specific trends of that space, and you're in tune to the new up and coming companies or tech that might be in your vertical. And then you can also drive some amount of synergies among that experience because you've helped scale a company in health tech before, and you can go run that playbook over and over. Or you can get together executives within a portfolio who are operating in similar fields and share experience, share the network. And so, like, that has always, that's existed for a while, and there has been this trend towards specialization. But what I don't think has existed is this idea that you can have a company just building in the space, like you can go build some kind of tech on top of Bitcoin or to benefit the Bitcoin ecosystem. And that goes to benefit the entire network. And what does that mean? That means everyone in the network is going to benefit from it. And it could mean if you have a portfolio in the Bitcoin ecosystem, that you have one investment that could be positively impacted by the contributions from another investment in your portfolio. And they may not even be collaborating with each other, but because it's this open, interoperable network, um, the opportunities for collaboration are even greater than I think outside of Bitcoin when I was talking about this idea of getting groups together and trying to deliver synergies among a portfolio. I think this is just incredibly unique as it relates to Bitcoin.
Yeah, and you guys run am I correct? Sorry, Hal Finney. my puppy, but you guys run a corporate get together every year of all your portfolio companies. Is that one of the ways, or how do you
Yeah, we do.
together? And that's also probably a benefit of investing with a investment platform, a fund such as yourselves versus an angel investor because of the network that you can bring to the table for a startup.
Yeah, I think well, first, yes, we do. We've been doing a annual retreat for our portfolio companies, which I think may be one of the most special things that we do as a platform is just getting together the best founders in the space, intimate setting, closed doors. It's not in the environment of a conference where, they're all, these people are getting hounded by all their fans and their customers. Like they can have real conversations, and it's not about how, we're all high-fiving and celebrating each other's success. It's like the most valuable conversations are the ones where you're talking about like what are the challenges that we're all going through. I mean, it's very tough to be a founder. It's very tough to be a founder in the Bitcoin space. And everyone's going through sort of similar growing pains, and just allowing interactions, allowing conversations to happen, and seeing what comes out of that. I mean, we've seen probably somewhere between a half dozen to a dozen both formal and informal partnerships among our portfolio. And I think as the portfolio grows, um, there's real value in sort of plugging into that network. So that's something that that we take a lot of pride in.
Yeah, I think that's pretty special what you guys organize, Grant. And yeah, you were speaking to the I guess the beauty of the network effect earlier. But that being said, I do think we're earlier than sometimes the price action leads us to believe. Um, and it's speaking of price, Grant, I wanted to get your perspective on something that I'm sure you've also talked with perhaps at these annual events that you do with your portfolio. But gi- given your experience in private equity and maybe with profitable businesses versus early stage growth business, How do you think about, or what advice do you give to entrepreneurs in this space regarding something that I think all of us inevitably get to, whether it's as an individual or as a company, which is you see Bitcoin's price appreciation historically, and of course it's very positive. Eventually, you start to think of it as an opportunity cost, right, of capital. So how does that tie into how you manage your balance sheet, your treasury as a growing company that's perhaps not yet profitable? What are your thoughts around that?
Yeah, that's very well put. I think it's the ultimate realization is that Bitcoin is the opportunity cost. I mean, at the margin, the more you understand it, the more you realize that it's the opportunity cost. It's the opportunity cost for individuals. It's, well, do I want to make this purchase, or do I want to like get a little bit more Bitcoin? And the same line of thinking ultimately applies to companies who are building in the space. It comes to investors who are looking to like perhaps consider investing in a fund versus like should they just buy some more Bitcoin. Um, I think Bitcoin will ultimately shift the thinking in a very significant way, of all of these groups. I've written about it. I wrote about it even a couple years ago when I started really thinking about and talking about this concept of Sats flows, which is sort of like the catchy thing that's sort of like the analog to cash flows. And like private equity is more oriented around cash flows. Like everything we do is based on buying based on cash flows. There's not just discounted cash flow analysis, but it's multiple based approaches to valuations aligned around cash flows. And even for that reason, I think my background is really interesting because I think we're going to be moving to a world that's more oriented towards cash flows or Sats flows because people will recognize over time that the amount of Bitcoin that you could earn or that you could buy or um, basically the opportunity cost of foregone Bitcoin that you would have otherwise had if you made a different decision, whether that's, investing in growth in your business or it's, making a purchase individually that you wanted to do. Any of these examples, the impact when you start looking at, well, how much Bitcoin did that cost me in this moment versus how much does it, how much did I forgo then, or how much now do I have the opportunity to acquire in the future as a result of not acquiring it now? And from a business perspective, of someone who's building, it's sort of this thinking of, you could invest in marketing, invest in your growth, or do all these things, which inherently as an early stage company, most companies don't start off profitable. You're burning cash, which is one of those phrases that to me, like reminds me of just like fiat VC and all the reasons why I don't like to call ourselves a venture fund, but like cash burn is a thing. It's like most early stage companies are doing it. But at the margin, it's like, well, do you want to um, put incremental money behind this and forego potential profits when over time Bitcoin is going up in value over the long term, obviously, to earn or to buy the same amount of Bitcoin in the future generally will require more dollars or more work in the future. Or, you could say it a different way is for the same amount of work now versus in the future, you're just going to get less Bitcoin in the future. And I think that really will highlight the opportunity cost of Bitcoin to groups. And does it mean that they start profitable out of the gate? No, but I think it starts to bring value actually more towards the present. And so what is the advice? I think the advice generally is um, stack as much Bitcoin as you can. Like that's like it's not very useful advice, or um, implementable advice. Like, but that's the mindset: is how can you come up with a sustainable business model that can generate revenue and can generate profits, and can you do that sooner rather than later? I think the idea of growth at all cost, like that's something that I don't think is going to exist. I think that was an outcome of unlimited money. It's a money printer world things that we had easy access to liquidity, which manifested itself in this growth at all cost mentality. I think with scarce money, then it comes back to a focus on generating real profits.
Grant, something I've heard you speak about, which I think is, and I've thought about it too, which is so interesting because it's never existed in these early stage tech companies. But for a Bitcoin company that might be earning in Bitcoin or have their treasury in Bitcoin, the appreciation of that Bitcoin or the increase in value of what they're receiving could even preclude them from needing to raise later stage investment rounds, meaning the early stage investors end up in a better position than they would if they were in a traditional early stage tech company. Can you speak a little bit about that, or how you advise your companies to balance holding Bitcoin versus other options of their cash flow?
Yeah, we've had I'd say I'd call it an evolution in our thinking, maybe just like different levels to how deep we've thought about it. Initially, we always like the mindset was for any company, as long as you have enough money to keep the lights on, and that means different things to different companies, but you need to have some money to keep the lights on. You shouldn't just start going and speculating on near term price appreciation of Bitcoin on your balance sheet if you don't have enough working capital for some period of time. And as a leadership team, you need to decide what that is. And obviously, as early stage companies, that's a big part of what you're trying to do is you're trying to build a product, a service, a company, and navigate this trajectory of how do you fund that vision, and when do you go try to raise money, and how do you do that most successfully? So that's a whole that's a whole story in itself on like how do you navigate it. But we always would say if you've got enough money to keep the lights on, then it probably does make sense to hold some Bitcoin on your balance sheet if you believe in it. I mean, you're building in the space because you believe in the space in the future, so you're already positively skewed towards the price of Bitcoin. Why not hold some on your balance sheet as well? Then we saw with the banking collapses that a lot of companies, had capital tied up at Silicon Valley Bank or, any of the others, and didn't actually have access to the US dollars that they thought they would, or there was a real risk that maybe it was just going to poof, disappear. And that was a real wake up call to a lot of companies. And the added element to our message to companies was, don't just consider Bitcoin as this, added buffer for incremental reserves on top of already holding some amount of working capital and cash, but also you probably need to have some very short term working capital in Bitcoin just in case the rainy day happens and your bank collapses, or the dollars that you thought you held or you thought were yours, you found out those actually belong to the bank now and you don't have access to them. So then that became another element of our thinking as those banking collapses were happening. But then I started to think a little bit more about it. And one of the things we've been consistently advising companies is ultimately, this also comes back to the Sats flow theme, is that the goal should just be to stack as much Bitcoin as possible. And if you have the opportunity to do that after you've met your medium term liquidity needs and your medium term buffer for like holding some extra Bitcoin, as well as met your very near term working capital um, safeguards, in case something happens and you hold some very near term amount of Bitcoin. Um, Maybe think even longer and just look at Bitcoin's price appreciation over a long term hold. And you can do all kinds of statistical analysis on that and make whatever assumption you want on the annual appreciation. But um, I think that it makes a lot of sense if after you've met those first two near term and medium term liquidity needs, then any extra you can put into Bitcoin for long term reserves, and those can go to offset any potential future fundraising needs you may have. As you said, Lynn, it could mitigate any need for a future dilution. And, relative to what you normally see with public companies, a lot of public companies hold a pretty significant amount of liquidity just in cash and short-term investments. And those generally aren't returning anything. At best, they're holding their purchasing power. But I think most would probably agree that they're sort of losing purchasing power over time. And if instead you can hold it in an asset that's appreciating in purchasing power over time, that to me seems like an added lever to drive equity value growth of your business, which if you're a business trying to grow, there's only a few levers you have towards doing that historically. That's generating revenue and profits. It's generating cash flows that can go to uh, improve your balance sheet position. But I think if you have Bitcoin on the balance sheet, that can also go to appreciate your equity value.
Yeah, it's really interesting hearing some of your thoughts behind all of this, Grant. And I mean, I think it also highlights the importance of, as a startup, having an investor that's aligned in principle with that mindset and that end goal of where you're trying to reach. I mean, just hearing you speak to all of these topics right now, it's clear that there's some real value in having a foundation as an investment platform on low time preference and year in here to build the future, right? Because I think that's precisely the mindset that a Bitcoin company goes into this space ideally with, right? So speaking of these of startups and the companies, Grant, can you speak? Perhaps some are listening to our show here, and could you speak to the process itself and what those expectations might be as far as not only the process but timeline? How does that look like between outreach to actually an investment decision being landed on?
Yeah. The short answer would be, and then I'll ramble a little bit after that, as I normally do. But the short answer is that like every investment is different. Every investment process is different. We've made investments or made decisions to make investments, almost on like a first conversation. In fact, I could probably look at our portfolio and call out a few where, we made the decision to invest before we even met the team. But on the other hand, I can also name some, like I could look at some of the companies and point to situations where there was a very long period of relationship building, of joint discussion on what the partnership would look like, what an investment would look like, what the strategic plan was going to be. And in some cases those are very long. I mean, what is very long? I mean, it could be 6 months, it could be even a year. um, that was my experience in private equity as well, where you often you might work on something for a year before you ultimately money changes hands, and then all of a sudden you're partnered for years. I mean, ultimately, yeah, we are establishing partnerships that we hope are going to last a very long time. I mean, that is ultimately this low time preference concept. But every process is different. As I said, we what is the common theme? I would say we generally are striving to back the best of the best. The best companies. I said it earlier that we invest across all major themes in the space. So it's, we're not picking out individual subsectors and saying, you know what, we got to like we're going to now go focus on this. I'm trying to find just the best of the best companies, the best of the best founders. Um, I generally what I most like backing are people and founders who are masters of their craft, and that's a very hard one to define. Um, but it's almost like you know it when you see it. Like I'm at risk of like forgetting certain people, so I won't go through the list. But like NVK, CoinKite, like that guy is a master of his craft. Matt Hill at Start9. I mean, he is a true master of his craft. Wiz at Mempool Space, Steve Barber at Upstream Data. Like you find, like I like backing people who are true masters of their craft, who are so obsessively focused with what they're doing, what they're building, the details, like every little detail behind what they're doing. They have just this extreme ownership mentality of how are they building it? What is their vision? And there's no one on the planet who is better than them at doing that thing. And so I don't know. Sometimes the investment process is like very short because you find the person, you know it, and you make the decision and you go back them and you figure out ways to support them. And you hope that, there's something that we can do to support. And then in some cases, it's a longer honeymoon phase to decide, is the time right? Is the time right for this company? Is the timing right for us to deliver the capital and help the business? So I'm afraid it's not necessarily a straightforward answer to give advice on to people on like, well, what can you expect from us? What you can expect is that we are um, we're transparent. We are authentically Bitcoiners. I mean, that's I think one of the key like the key value props of our platform is that we live and breathe this stuff 24/7. I got a node running right next to me. I got like 5 nodes running right next to me. I mean, we use these, we use all the products. We participate in the ecosystem. We contribute in any way we can. We care about it deeply. Um, so when we see something that we want to exist, that we'll do our best there.
What advice would you give to an entrepreneur, somebody who's thinking about starting a company, what to focus on, or how to even go about? Is it building their own team, or focusing on the technology, as you say, becoming a master in what they're doing, or do they need a little flexibility? Perhaps what they're thinking about may not have a market fit, but something close to it might, or aligning with investors. How early do they start approaching investors if they think they're going to need capital to grow? So, I personally would love to see more startups think about Bitcoin protocols for building on, and think about the opportunities that exist in the space. So, what do you have advice that you would offer?
Yeah, I think, I do think it is important for people who might want to be a founder of a business to consider, maybe they haven't considered it before, but just some self-reflection on what do they think what do they think that they are best in class at? What do they bring to the table that is unique relative to someone else? It's hard to start from zero, start from scratch, and think that you can all of a sudden become the best at something. Usually, it's based on like what have you had experience doing in the past? Where do your passions lie? Because generally those areas will deliver you to a place where it's less mental burden on you. Like if it's something that you really enjoy, then what I said earlier, it's very difficult being a founder. So if you're doing something that you generally are passionate about and enjoy, then that helps make the experience of being a founder a little bit better. And then if you're doing something, like if you're bringing something to the table, unique experience, time, that I think puts you on a good footing. But that's a tough thing to do that reflection and decide. And it's not always the case that a great founder starts out of the gate immediately with the brilliant idea. Sometimes it involves a lot of trial and error where you've got a founder who is throwing a lot of ideas up against the wall and seeing what's going to stick. And then in the fourth, the fifth, the sixth iteration, they really find their sweet spot. Like we've seen that with some of the founders that we're backing. So that's losing my voice a little here, but that would be the advice I would give.
No, well, thank you, Grant. I mean, we're wrapping up here, so I don't know, Lynn, if you have any other questions other than maybe thanking Grant and letting the audience know where to find him.
Well, I think we're going to need to have more conversations with Grant. I mean, we haven't even really talked on valuations, on exit potential. There are a lot of questions that I'd love to dive deeper on, but I think it's a great start, and we would like to continue the conversation as we go forward and have you back again. It's been, I think, a fascinating conversation. I think it really gives an insight as to how, and I'm going to use the term, VC in the Bitcoin space, differs from what people are currently thinking about VC. And I think we've highlighted some of the differences there that are so key and so important, and what you're doing different. So I really want to, number one, express the appreciation for what you're doing, but then also to express appreciation for sharing your thoughts and ideas and perspective with us and with our audience.
Absolutely. No, thanks for having me. If I could interject one last comment, which it's sort of this theme of discussion lately is around contributions to open source, and there's some debate on whether or not that makes sense and should we be funding open source development. And I think it's an interesting discussion topic that more people should be having. From 1031's perspective, we're very proud to support open source development on our end. Coming back to like this whole idea of alignment with Bitcoin, that was something we decided really early on was we wanted to not just invest capital for delivering investment returns, but also just to contribute to the space. And so from the outset, we were making grants to contributors to the open source ecosystem. Now on our fifth year, the first year we gave a grant to Bitcoin Q&A, who was this individual who was doing education in the space. He wrote a lot of great guides just for people who wanted to use Bitcoin, like how to use the tools. We gave a grant. This was in 2021. We were a founding contributor to OpenSats, which Matt Odell on our team is a founding member there. And if you ask me and sorry, this turned into a longer ramble now, but if you ask me what has been one of the most significant developments in the ecosystem. I would say it's some of these organizations that have sprung up to support it, like what OpenSats has been able to achieve in the last 4 or 5 years is incredible, and that has been because of generous people like Jack Dorsey who gave a lot of funding. But it's not just OpenSats, it's Brink, it's HRF, and when we saw those type of efforts early on, we decided, you know what, we want to contribute back, and so we use a portion of our management fees just to make no strings attached grants. So I mentioned Bitcoin Q&A, I mentioned OpenSats, which we did that a long time ago. We have funded developers to go over and travel to the Human Rights Foundation summits. We gave a grant to Fediment, the open source project before Fedi even existed as a company, or any companies existed that were trying to go after that area, which we think is really exciting. And then we also more recently gave a grant to the developer Callie for his work in that sort of adjacent area, Chami and eCash. And when we did it, when we announced it, we announced it in 2021. I said, you know what, we're going to be using a portion of our management fees to do this. Again, it's no strings attached, no influence on what they do. It's just areas, it's either people that we think are doing interesting work or projects that seem important to us. We said we hope that other funds will sort of consider doing something similar, because we have this unique model where we do have recurring revenue that comes in the form of management fees, and why not create this recurring contribution model to support the people that make all this possible. So that is one area that I would leave the audience with. I think it's a really interesting area of discussion. There's been a lot of debate around it right now, and I hope to see more support from other groups going forward.
Yeah, and thank you for mentioning that, Grant, because I mean everything you're doing with regards to community support, because I think we all need to remember that Bitcoin, its history up until now and how it was born. I mean, it has been bottom up, right? Which is part of the elegance of this network and industry. So, it's great to hear everything you're doing with regards to community support. So thanks for highlighting that.
All right. Well, thanks again for having me.
Thank you, Grant.